Level 1. The Digital Stutter. You're standing at the counter of your favorite coffee shop, tapping your phone against the reader. Nothing happens. You try again. Declined. It's embarrassing, so you laugh it off and pull out your physical debit card. Declined. You open your banking app to see what's going on, and the screen just flickers. Your balance isn't zero, but it's a weird, nonsensical string of numbers that shifts every time you refresh. You step outside, feeling a knot start to tie itself in your stomach. You walk to the ATM across the street, but the screen is black, except for a single line of gray text. System unavailable. You try to call the bank's customer service line, but you don't even get a ringtone, just a busy signal that cuts the static. On the TV inside the shop, a news crawl is scrolling across the bottom of the screen. Major banks report global technical issues. Officials urge calm. But it isn't a technical glitch. Behind the scenes, the plumbing of the global economy has just seized up. The overnight lending markets that move trillions between banks so they can function have frozen solid. The banks have stopped trusting each other, so they've stopped moving money. Your digital wealth, every cent you've ever worked for, is currently trapped behind a wall of unresponsive code. It's still there technically, but it won't buy you a loaf of bread. Level 2. The Physical Panic. 24 hours have passed and the glitch hasn't been fixed. You drive to your local bank branch at 8 a.m. and the line is already 3 blocks long. You see people banging on the glass doors, screaming at employees who are hiding behind locked security gates. You see a mother sitting on the curb, crying because her card was declined at the pharmacy for baby formula. A classic bank run. You've always been told your money is safe. But the truth is, because of fractional reserve banking, the bank only keeps about 10% of your money in actual cash. The rest is tied up in loans and investments. Once that 10% is handed out to the people at the front of the line, the vault is empty. The bank manager finally steps out with a megaphone, looking like he hasn't slept in 2 days. He announces that all withdrawals are now capped at $100 per person, per day. The crowd hits a breaking point. The shouting turns into a roar, and the first brick hits the window. You realize in this moment that the $50,000 you thought you had in savings was never actually yours. It was a loan you gave to the bank and they just told you they can't pay you back. Level 3, the supply chain snap. The glitch has reached the grocery store. You walk down the aisles, and it isn't just the prices that are the problem. The shelves are skeletal. The invisible trust that moves that food has snapped. Modern trade doesn't run on cash. It runs on letters of credit. Shippers use these digital promises to pay for fuel, tolls, and cargo. But since the banks don't trust each other, those promises are now worthless. The container ships are idling off the coast because they can't pay for the tugboats. The trucks are parked in lots because their fuel cards are declined. You're no longer checking your stock portfolio. You're checking the expiration dates on the cans in your pantry. You realize that just-in-time delivery was actually just in case the banks work. You see a man in a business suit in the parking lot trying to trade a Rolex for a flat of eggs. The seller doesn't even look at the watch. Gold and steel can't feed a family, and in a supply chain collapse, the person with the calories holds all the power. Level 4, hyperinflation. To save the system, the government does the only thing it knows how to do. It starts the printing presses. Trillions of new dollars flood the digital veins of the economy. You wake up to a notification that a $10,000 stimulus check has been deposited into your account. For a second, you feel a surge of relief. Then you go to the store. A loaf of bread is $500. A gallon of gas is $1,200. This is known as the Weimar scenario. When you print money to solve a debt crisis, you don't create wealth. You destroy the value of the currency itself. Your life savings, which could have bought a house last year, can now barely buy a tank of gas. You see people using $100 bills as wallpaper because the paper is worth more as a physical material than as a medium of exchange. You're pushing a wheelbarrow full of cash to the store just to buy a single bag of rice, and the price tag changes twice while you're standing in line. At this point, the dollar is dead. Level 5, the bail-in. You wake up to a government decree on every screen in your house. The banks aren't being bailed out by the government anymore. Under emergency banking laws that have been sitting on the books for years, the bank is legally allowed to seize a percentage of your remaining deposits to stay afloat. They take 40% of your balance and replace it with bank stock in a company that is currently worth zero. You realize the FDIC insurance you trusted was a fairy tale told to keep you calm while the vault was being emptied. A news anchor tells the camera that your sacrifice has saved the global financial system, and they thank you for your service. But looking at your screen, you see half your life's work just gone. Level 6, the CBDC rollout. Cash is officially banned for your safety. To stop the black market and the chaos in the streets, the government introduces the central bank digital currency. Every citizen is given a digital wallet tied directly to their social security number. It's presented as a miracle of efficiency, but this isn't money. It's programmable control. Your new digital dollars have an expiration date to force you to spend and stimulate the economy. They have geofencing that prevents you from spending more than 20 miles from your home. If you post something controversial online or attend a protest, your wallet is simply toggled off until you comply. You try to buy a steak at the market, but the screen turns red. Monthly carbon limit reached. Please purchase soy protein instead. Level 7. The sovereign default. The crisis has outgrown the banks. Now the government itself has run out of money. The social contract that kept the lights on and the water running just hit a brick wall of reality. Because the currency has lost all value and the tax base has evaporated, the state can no longer pay the military, the police, or the pensions. You see police officers taking off their badges and walking away from their posts because their paychecks bounced. Without a functioning government, the infrastructure we take for granted begins to crumble in real time. The power grid flickers and dies because the utility companies can't pay for the coal or the maintenance. Water stops flowing because the treatment plants are offline. You aren't a citizen anymore, you're a survivor. You realize the state was just a giant insurance company with an army, and the insurance company just went bankrupt. Level 8. The Great Reset. In the middle of the chaos, a new voice emerges. The global stakeholders step in to restore order. They propose a global debt jubilee, a clean slate. Every personal debt you have, your mortgage, your student loans, your car payments, is wiped out in a single stroke. But there's a catch. You will own nothing, and you will be happy. In exchange for your debt being forgiven, you surrender all private property to the state or a global housing fund. You no longer own your home. You rent it from a global housing fund. You no longer own a car. You subscribe to a mobility service. You have become a digital serf. You're handed a bowl of lab-grown protein and told that your sacrifice has saved the planet. You have no debt, but you also have no future. You're standing in a house with a digital lock that you don't own, waiting for your next credit allocation. Level 9, the Technocratic Elite. While you were watching your savings evaporate and your car being repossessed, the view from the top of the pyramid was very different. These are the architects, the asset managers, the people who saw the meltdown coming because they were the ones who built the house of cards in the first place. While the world was in a blind panic, they were shorting the global economy. They didn't lose their homes. They used printed credit to buy yours. They aren't using the same digital currency you are. They don't care about CBDCs or social credit scores. They deal in hard reality. Gold, thousands of acres of fertile farmland, and private water rights. They've successfully transitioned from financial power to biological power. They don't just own the banks anymore. They own the things you need to stay alive. You see a map of the world, and every single family home and every independent farm is now marked with a sold sticker. The buyer? A handful of global funds that now hold the deed to your existence. Level 10. The Aftermath. The meltdown is officially over, the new normal has arrived, and the world is stable again. But look around. The cost of that stability was your humanity. You live in a 15-minute city. You don't have a car because you don't have a mobility credit. You eat lab-grown meat because your carbon quota doesn't allow for anything else. You have no privacy, no property, and no path to move up. You're safe. You're fed, and you're owned. The financial meltdown was a feature of the system. It was the bridge designed to take you from a world of messy freedom to a world of total digital management. This might sound like a conspiracy theory, but the laws for bail-ins are already sitting on the books in the US and the EU. The CBDCs are already being tested in pilot programs as we speak. The only real question is, what are you going to do when that ATM screen finally goes black? Stay informed or stay owned. The choice is still yours. For now.